70% of all people on the planet now will eventually need some sort of care. Unfortunately, only 7% of all people ever get around to buying a long-term care policy. There's just a huge difference in the number of people that are needing it, but not buying it, unfortunately. So it's just crazy. Hey, this is Matt Helton with OneTrust Home Loans, your reverse mortgage experts. And today we have another awesome episode of the Serving Seniors podcast. We have Mr. Raymond Lavine, and he's the founder of Long-Term Care Benefits. He's a multi-decade financial services veteran, and he's going to share with you how these benefits can really work in seniors' favor now and in the future. Raymond, how are you doing today?
I'm doing well, and thank you for that introduction. And since you're in Nashville, I'll tell a brief story.
Sure.
Introduce Lyndon Johnson, when he was introduced, would always say, thank you for the gracious comments. And he says, my mother would appreciate it, and my father would believe it.
That's awesome. That is awesome. Well, thank you. I think we're going to have some fun. Thank you for bringing some levity to these heavy topics that we have to deal with on a daily basis. Life's too short not to have fun, is what I always say.
And also, we live a life, but what's also good is if you live a life where you have information and you're curious about things, that'll help you get through life if you know what it is you're trying to accomplish.
That's awesome. Yeah, no, thank you for saying that. Well, Raymond, appreciate you being here. And I've got my heavy shirt, haven't shaved in a few days because we're having a snowstorm, an ice storm here in Middle Tennessee. How's the weather where you are? Where's home for you?
Home for me is Gig Harbor, Washington State. Okay. And it's let me see what's the actually there is sun today. But it's been cold. It's 39 degrees.
Okay.
We don't have snow. But we do get it from time to time. But I am aware that the South has had an ice storm.
Sure. Yeah. Well, we'll make it through, but it is an interesting time. We've got about 250,000 people in the city of Nashville. It's only officially about 400,000 or 500,000 that don't have power. Last I saw. So. They need your thoughts and prayers.
The thing that I do is don't bring your barbecue into the house, and don't bring your barbecue in the house. It's unsafe.
Okay, that's right. That makes sense. Well, Raymond, if you could do us a favor, maybe bring us up to speed. We'd love to hear some background. Maybe tell us a little bit about yourself. Where you're from. What some jobs and what was your journey to get into the financial services world where you are today?
And you said this. You said this wouldn't be 2-3 hours. You said that.
Yeah. If you can give us the longer short version. Completely up to you.
Well, what got me into long-term care benefits is I've been in financial services. I've been in mortgage banking. I've been in commercial banking. I've been in life insurance and insurance. So I've had actually at one time. Actually, I was also in. I did executive search. I placed accountants at either at other accounting firms or with companies. But one way or another, it's always been something in financial services. But also I was, that's right. I said I was in mortgage banking. What got me into long-term care benefits is that you live long enough, either family or friends or yourself, you think about caregiving and you think about what's going to happen if you need caregiving. And there are three things that people don't plan for when we talk about, life planning, is that where do you want your care? Because at some point, either family or yourself, you're going to need caregiving. So where do you want your caregiving?
Right.
Who will be responsible for it? And that actually goes into the area that you do. How are you going to pay for it? But do you have enough cash flow? you're making 500,000 a year, a million a year. What are you making, and what portion of that is your lifestyle? Because most people got used to lifestyle. They like to pay for the lifestyle expenses. However, if you need caregiving, some portion of that or a lot of it could be for caregiving. So that goes to things you're doing. If you own a home, do you refinance it? Do you do reverse mortgage? And then, if you do that, then, that also gets into a financial thing of, should you then buy life insurance so that you can buy back the loan when you die, so that the home, if the family wants to keep it, will need to have money somewhere to pay to pay out the loan. So then the house can go to as a legacy, whether the family wants to own it or sell it, and have a legacy.
Completely makes sense. Yeah. So you kind of help folks work through all those question scenarios and come up with a game plan, it sounds like.
That's right. I mean, look, long-term care insurance isn't for everybody. And when I first heard that, I said, well, what does that mean? And what it means is, if you don't have health, then you can't get long-term care benefits.
Mm.
If you have, a reasonable amount of health and you have finance, that you can pay for it, depending on the state, you can get short-term care, you can get traditional, you can get hybrid, you can do a reverse mortgage, you can get money. There are a variety of ways you can get money, but one way or another, you got to have a plan to do that. And what I say to myself, look, I buy insurance too. I'm not always happy about it, but there's no requirement that you have to do anything. However, when people come to you or they come to me, sometimes they're in a crisis, and that's the toughest time to actually do something when when you really you haven't planned and you need the money. And in more cases than not, if they have a home and the ratios are fine, and I don't think I'm not sure about the credit for reverse mortgages, but if the worst time to do anything is when you're in a crisis. The worst, I mean, because you make the worst decision. I know. I mean, I'm old, and I've made lots of bad decisions because I was annoyed or I was upset, and I didn't have my family to be around to say, look, calm down. Let's get some perspective about this. But that's what I do. Is I'm in the business to help people to plan in advance. So when you have a caregiving issue, that you can say, yes, I've got the money to do it. I can do. I either own a plan or should own a plan, or there are other ways to do it. You can get family and friends to help you. You can get a reverse mortgage, because your house can be a great asset to raise money to pay for things, not the least of which be for your care. But there are other things that it does. Home modification. You want to stay at home, it'll pay for home modification. Now, we're not talking about the kitchen remodel, although that's that can also make a difference too.
Sure.
But it might be. If you're in a wheelchair, do you need modifications so that you can get to things? Your bathroom, hallways, and the things that they're not horribly expensive, but they do handlebars, lights, carpeting, in your bathroom, do you need a walk-in tub or some kind of shower? Um, you know, uh, these are things that either a long-term care plan will pay for some home modifications, or if you do, refinance your home or you get a reverse mortgage, you'll have money that can do that you can stay at home. I always ask this question every once in a while. If I think about it, it comes up. You know what the ratio is if you to caregiving if you're at home to the ratio if you're in a care center? Do you know what the ratio is?
Uh-oh.
Well, if you're at home, the ratio is great. It's however many people to those that need caregiving. That's the
Okay.
rate. So even 1-to-1 can be a great ratio.
Okay.
Great ratio.
Yep.
Ratio, if you're in a care center, it depends, on the kind of care center that you live. It might be 1-to-5, 1-to-10, 1-to-20, and the higher the ratio, the worse it is, because when you need something, the
Sure.
per- no, if you need to go to the bathroom, you don't want to wait. Americans don't want to. That we're impatient people. If we need
Right.
something, we want it now.
Right.
We're at it right now,
Exactly.
and of course, if you have the 1-to-1, that doesn't always mean that somebody's going to be available right away. But you have better odds if you need it to be taken to the bathroom, or whatever the issue may be. That you have people to help you, because there's two reasons for that. I mean, these are real. One is that people do not want to be vulnerable. I don't want to be vulnerable. I don't
Mm.
want to feel vulnerable. The other thing is that people don't, when you may not think that this exists, but people that live at home or sometimes feel invisible, because if they're
Mm.
walking slow, in a walker, they're slow. People are impatient. People, they feel invisible, as if they don't matter, because
Wow.
people are rushing around. So you don't want to be invisible, and you sure as hell don't want to be, if I can say that on a podcast.
You
Um,
can. That's okay.
yeah, and you don't want to be, and you don't want to feel vulnerable.
No, very well said. That's great. That's great. Well, maybe could you share, um, Raymond, some of the um, positives or some of the things you see people do right when it comes to long-term care benefits, and then maybe share some of the things you see people do wrong or some of the challenges that you run across people with in long-term care benefits.
Well, I'll start with this. Hope is not a plan. Hope
Okay.
is a plan. So if you want, it, just like, in education, or you plan, you don't just go on a trip. You should you plan for it, what you want to do. If you want to buy a car, you figure out, what kind of car do you want to buy. And in your business, you want a home? What kind of home do you want to buy? Where do you want to live? Do you want a 1-story, 2-story? Also, but then it also comes down to money. Uh, what kind, what in what situation? What's your financial situation that you can buy something?
Mhm.
So, uh, uh, and it might be, if you want to buy a home, do you need to save for 5 years, in order to get a down payment? So with long-term care benefits, it's about planning, and the earlier you do it, there are two very good reasons. One is you never know. People think that when you reach 65, that's when you start having health issues. It isn't, because you might have accident, you might have an illness, have a pre-existing, like a neurological. You can have a stroke, you can have a heart attack, you can be walking on the curb, and you get hit by a bicycle. I mean, they're all kind, or you have an automobile accident. So there's the unexpected. So most people have, health insurance, and they'll certainly have home insurance, and they'll have car insurance. That's sort of a standard. But you never think about the thing that really is going to happen, is that you're going to probably need care, and almost inevitably. So plan early, meaning, as soon as you think, that at least you can pay, most, your bills, and you have some extra money, is to say, let me look at a long-term care plan. The younger you are, the less the premium. The other is the health. And if you're in a certain state where you can get short-term care, there's some great short-term care plans that can be, you can get for $125, a very good plan. Now, obviously, if you have, for more years, you have 4, 5, 6 years, or you have lifetime, but lifetime benefits, then it can be, then it can be more, 250 or 300. People say, "Oh, I don't want to spend that kind of money," but then look what we're paying for car, whether we finance it or lease it. People are paying, 850, 1,500 a month. Uh,
Right.
and I'm not saying you shouldn't buy the car, but I am saying that, if you're complaining about, that long-term care insurances, the premiums are too much, the cost of care, depending on where you are and the kind of care that you want, can easily be 5, 6, 7,000, but it can be, 10,000.
Mhm.
If you're in a care center, it can be it can be at home, depending on, the level of care that you need. And my mother died a couple of years ago. She was 103, and she had
Oh,
full
wow.
staff, full
Wow.
time, 24 hours at the condo that she lived in West Los Angeles. Now, let's do the arithmetic. What's $50 or $60 an hour times 24 times 7 times 30 times 365?
Wow.
You know,
Wow.
yeah. I mean, it can get very expensive. Now, my mother was a fluid. And but she actually owned a long-term care plan. And I asked her once, why did you own it? I mean, you make $1 million to $1 million a year. You established a foundation, you've given money to your law school, why did you do that? And she said, and they were not insurance buyers. They really were not an insurance buyer other than what they needed. But they several times in their lives, they needed caregiving. So, in my mother's in her early 70s, she bought a plan. My father couldn't get it because he had health issues, but she used the plan. She got a lifetime plan. Anyway, the point is that used the plan for 18 years. But I asked her, "Why'd you buy it?" She says, "Nobody has that much money to pay for your lifestyle and caregiving." So she
Wow.
estate plan. She under she knew how to count money.
Wow, that's awesome. That's a very, very good point. Is it doesn't matter if you're at the top of the rung or in the middle or at the bottom, you're still going to need care. I saw a statistic that
And
said
you
that.
got to pay for it. I mean,
Oh yeah,
you want to buy a house, you got, whether you pay cash or you have a loan, and even if you pay, you still have to pay. You have to pay for utilities. You got to pay for
right.
them. It's not uh, uh, whatever it is you own. There's going to be maintenance, upkeep, insurance, property taxes.
Mhm. Yeah, no, that makes sense. Yeah, I saw a stat. It said that uh, 70% of all people on the planet now will eventually need some sort of care. Unfortunately, only 7% of all people ever get around to buying a long-term care policy. There's just a huge difference in the number of people that are needing it but not buying it. Unfortunately, so it's just crazy.
And it is, and it's unfortunate. And maybe you have some reasons why. Um, One of the things that, 20 years ago, more people were buying long-term care plans, but then it went
Okay.
through a bad patch of premium increases. So it's gotten a lot of bad, influencers, and a lot of people say, "Look, don't buy it because if you buy it, the premiums will go up." Well, my car insurance has gone up, my homeowner's insurance has gone up, and
Right.
it was unfortunate the way it happened. But now plans are more stabilized. Actually, some premiums gone down. There was also issues with health assessment. But the thing is, what troubles me is that financial planners and wealth advisors aren't advocating it again,
Mm.
saying, "Well, you don't need," but you do. I mean, how many people, even if you're making, whatever income, and you're not paying all of it in your lifestyle, how many people can really, suddenly come up with 6, 7, 8,000 additional a month? And if you
Right.
don't, what are you gonna cut back on? Eating? What are you going to cut? Are you going to sell your car? Well, if you do that, then where are you going to get the transportation? Who's going to drive you? You're going to give up on your insurance. I mean, what? Uh, these are things of which, uh, uh, the earlier you do it with premiums and your health, then, if you don't have a disruption in your income, or your income has gone up, it isn't going to be as big a ratio.
Yeah, you're right. Yep, you're exactly right. So, and then when I look at it, where 70% of us are going to need it, but only 7% of us actually buy the insurance to cover it, right? So there's 93% of all people don't have any coverage, but we're almost all going to need it. And I think it boils down a lot to, Raymond, the fact that most of us need some sort of like a deadline or catalyst, or I think you mentioned earlier, right, that a lot of us make decisions when we're rushed and in a very difficult situation. So with long-term care, it's one of those things like, yeah, I'll get around to it, right? I'll get around to it next year or next month, or, it's too expensive right now. Similar to people saying, well, you know what? Well, I'm gonna max out my 401k next year, right? I'm gonna save money next year. I'm gonna, do all these things, and then all of a sudden, someday you wake up and you're 70 years old and you've retired and you never got around to maxing out your 401k. You never got around to the long-term care policy, and then when you finally got around to looking into it, it was really expensive, or you didn't even qualify because of health issues. And that's what I love about what we do. In our senior lending, the new and improved reverse mortgage options out there, I kind of call them really the best way to describe them is second chance loans. It's the second chance at the 401k you didn't max out, second chance at the long-term care policy you didn't buy, because you did buy a home, right? Because last time I checked, people like to live indoors, especially with weather like we're dealing with right now. And in a traditional mortgage, there's a clause, a lot of title companies will call it the no pay, no stay clause, right? You have to make that payment every month. It's not like long-term care insurance. It's not like a 401k where you can maybe kind of think about it, do it in the future, right? You have to make the payment every month. So people bought homes, made all the payments, and the market's real estate usually is in your favor, right? It usually goes up. So these folks have all this equity, and that's what we love to educate people on. There are some effective, efficient, and ethical ways you can use all that equity to be able to supplement your care, supplement your lifestyle, supplement the things that you may not have got around to doing, but oh, by the way, you might have 300, 400, 500. Some people have $1 million worth of equity in their home. And that's what we're able to do, is to show them how to use, same way you would use long-term care to do what you do. It's just that they didn't buy it 30 years ago and they wouldn't qualify for it now. So it's kind of a second chance at all the stuff that you preach. So that's why I wanted to have you on here, right? Because hopefully you can reach the younger masses. We can reach the older masses, and together we can help seniors have better retirements.
And there is also an added caution to it, is that just because you get a reverse mortgage, people, even if you're not in necessarily good health, people are living longer. So you got to make sure that you don't outlive your reverse mortgage money.
Oh yeah,
because you can. The other economic, and this is economic or dollars and cents, is that if you use that money and you don't, and you actually need to hire a caregiver, or you have family, if let's say somebody's making 70, 80,000 a year in income, or higher or lower, whatever it is they're doing, if they have to give up their job, what the cost of care is now? It's now 70,000. Somebody has given up something, and it's the retirement planning. Wow. It's their Social Security. So there are a lot of economic issues or money issues that are involved. But that's the thing too, is that just because you have a pool of money, you got to make sure that it's managed, or it could be depleted. And one of the worst things is if you look at your family history and you say, we all die at 74 or something. Okay, you can plan, but sometimes you can live into your 80s or 90s, and depending what it is it just frailty, or is it cognitive? And if it's cognitive, I mean, you can go on and on quite some time. I mean, look at Gerald Ford or Reagan. Or even HW. I think he had cognitive, and they lived into their 90s. So you got to make sure that however your pool of money, that you can outlive that. The reason I know people that are in that situation. So it isn't just it's something that's personal. It's not theoretical or something.
I know completely makes sense. Yeah, and I know the long-term care. I know you got to have a advocate like yourself that has been able to educate and read the fine print. And then on the reverse mortgage side, one of the changes that they instituted when they made I call this the consumer protected new and improved version of reverse mortgage, is you still own your house. So it's just a regular mortgage, meaning that folks can sell it whenever they want. They just have a mortgage on the home. Yeah. The other thing that they changed too is we can only lend lower percentages. So used to we could lend, 70, 80%. Well, if you didn't make a payment, right, the balance goes up some. If you start off at 80, 90%, you're going to owe more than the home's worth and end up upside down. In today's world, we start off usually can only lend 30, 40, 50, 60% if they're up in their 80s or 90s, meaning that whenever they either one, need to move out of the house, or two, pass away, there's going to be equity in the home. So that's where we kind of help them come up with a multi-stage plan. Stage one is, hey, we can give you this much money to get off the ground, work on your house. Stage two, you can get this much a month. Stage three, in 10 years, you'll have this much equity left in your home. That's a good point where you may need to sell your home, cash in on the 200,000 equity you have, and move into a facility. And the next stage of long-term care, right, could be like an assisted living or a senior care facility. But the good news is that with these reverse mortgages, there's still going to be equity there to use.
Well, for many people that's a very good plan. And as I said, or you do both. You own a long-term care plan. You have reverse mortgage because you could help your family with education. There are a lot of things you can do, or you can leave a legacy. It just depends, what with the money. What are you going to do with the money, and are you going to do it wisely?
Exactly. No, there's not one size fits all, right? There's just strategy planning and wise people like you to help people make good decisions.
Well, I try.
I can tell, and we don't have all the answers, Raymond. As you know, nobody has all the answers, but I've found that it's usually you come up with the right answer as long as you have your heart in the right spot and you're helping people make decisions based off their situation and their facts, not giving them advice based off what makes you the most money as the salesperson, if that makes sense. And I can tell that you come from the right spot where you give people the advice that's best for them, because if you help them make good decisions, it'll all work out for you in the end as well.
That's right. And the best thing is if you rather than worry about it, or get depressed about it, is talk to somebody. Talk to Matt Helton. Talk to Raymond Lavine. Talk to family members, or talk to if you have advisors, and say, look, I have these concerns. I'm worried about it, and see what your options are. Because then you'll feel better. At least, and you say, look, here are my options. What do I think is best for me? What would be the appropriate situation? But just worrying about it or complaining about it is not. You're hoping that that you'll become a lottery winner or some other magical thing. And I hope you do. I hope you win the lottery. But even if you do that, then you have some serious planning. You got tax planning, and so it isn't just that the money goes into your bank account. Now you got to figure out, what am I going to do with this money? How will the money survive, and what do I want those funds to do?
Yep. Exactly. Just different challenges, but still challenges to take care of. Well, Raymond, could you maybe share with us as we kind of think through, just so people can have it in their mind, could you share a couple examples of maybe people you've met in the past that you were able to help in the situation, and also share people that come to you that you're not able to help and why you weren't able to help them would be great.
Well, people come to me from a variety of reasons. Sometimes they've been in a care situation, and they'll have then the plot is, if that happened to my parents or people I know, it might happen to me. Maybe I need to get a plan.
Okay.
And the other might be that their financial advisor or some or family or friends say, "Look, we have a plan," or we have a plan. So the family or friends will encourage them to look into getting a caregiving plan or having some kind of caregiving plan. And the third is what I call the unconscious, is that I try to, in SEO and all kinds of things, to get those that aren't even thinking about it to be thinking about it, at least have the conversation, at least know what it is. The other thing that is important is that companies, if they're doing well, should have, as part of their benefits, offer their employees a long-term care plan. Why? Well, first of all, for the company, the premiums are deductible, and they can, just like health insurance, they can either pay 100% or at least 50% of the premiums. The second is that the plans are portable, so you could take it with you. So and I was talking to somebody last week, and they were saying, "Well, I don't know, that somebody would, if a young person would be interested." And I said, "I have a rationale. It's a good investment." What do I mean by that? It's a good investment. If you own a plan, it's like, some people, they'll get the grandparents will buy them a life insurance policy. And even if it's 5,000, depending if it grows, 70, 80 years later, it can be worth, a nice pot of money. If you own a long-term care plan through a company and you keep it, even if it's 2,000 a month and it's $50 a month, but if you have a good cost of living rider on it, 3 to 5%, do you realize what that plan would be in 50, 60, 70 years? I mean, and you might not even need to buy another plan for $50 a month. For the $50 a month that you're paying, you won't even know it exists. You won't even think about it. It can be a nice pile of money to pay for care. So companies, I think it's important for companies because they're finding that their employees are leaving because they need caregiving plans. So those are the 3 or 4 ways. And sometimes I've had people that will call me from nursing homes. So find me on the internet somewhere. They'll say, "Hi, I can't get such a," and it's heartbreaking. There's nothing. There's nothing I can do. Now, for those that either for premiums or for health, there's a plan that you can get. It's like getting a Walmart or Costco or some subscription plan called True Freedom. $95 a month. If you can get family members to pull in, $95 a month. I think what you can buy are hours at home. And it works exactly the same way as any other long-term care plan for $95 a month. The only thing, you don't have to have any kind of health. You're guaranteed to get it so long as you don't need the care right away. At least give it a year. In other words, buy it, and then if you need it a year, 5 years from now, you can get it, but you can't get it right away. But there are no health questions. You can buy it in the morning and be covered in the afternoon. It's that fast. And then you can buy it. What you do is you're buying hours. So there's something out there, but you got to talk to somebody like Raymond Lavine, to say, what are my options? Rather than, I don't know, it's too expensive, or I don't know if I want, and I don't, and the question I will ask is, what do you want your care to do? Where do you want your care, and who do you want to be responsible? We could figure out something. Now, there is one more thing. If you have assets, let's say you own a annuity, or you have a cash value life insurance, you can sell your life insurance as an asset and get cash for your caregiving. So there are ways to do it, but you got to have the conversation with somebody like me that knows how to do it. In order to say, that you can transfer to a long-term care plan you can leverage. Just the same in a reverse mortgage. What do? You're leveraging your money.
That's awesome. That is awesome. Well, thank you for all your expertise. And I really do appreciate you sharing that with us. Raymond, as we wrap up here, is there anything that I didn't ask you that I should have asked you? And then also, how would people get in touch with you to be able to get a piece of your wisdom?
Well, my wisdom is if you want equity in your home, talk to Matt Helton. If you want to talk about long-term care benefits, talk to Raymond Lavine. My website is www.lavineltcins.com. One other added pitch. This will be 15 seconds. Is if you go to on my website to the upper left. You could put in information about your lifestyle that will give you an idea. And don't lie. I mean, be somewhat honest about it.
Okay.
Your lifestyle, which then it will tell you, what you're likely, the age you're likely to die, or maybe even caregiving. And then it will show what caregiving is, the cost of care. Give people, give you a perspective of saying, if you want to do nothing, this is what it's going to cost, and you're going to have to figure out how to do it, or to have a long-term care plan, or do a reverse mortgage, do something. In the lower right-hand corner, all the way down in my website, it used to be, in websites you have, 57 frequently asked questions, and usually it's never the one that you really want.
Mm-hmm.
That you put in, information, and it's AI based. It'll actually give you some very good answers. So you won't have to look at frequently asked questions. Just go to the lower right. There's 3 dots. You can put in, and you can ask long-term care questions that will give you answers, so that when we have the conversation, or it'll ask some of the basic things. I mean, the usual thing everybody wants to know is, how much does long-term care insurance cost? And the answer is, we don't know until we know what you want your plan to do and your health. And then and also the state you live in, what plans are available. And then we can design a plan or plans that can give you the kind of benefits you want. Just the same in reverse mortgage. There isn't just, you have a variety of companies and choices and options. You just have to talk to somebody that's knowledgeable enough to give you advice of, what would be a good plan for you.
That makes sense. Well, Raymond, I want to let you know that I really do appreciate the way you're serving seniors, the way you're taking care of people and educating them on what their options are, so they can not just get by, but they can actually thrive in retirement. So thank you for all you do.
That's right. Matt, that's right.
Well, that's awesome. Well, thank you. Look forward to visiting with you more, and look forward to having you on the show again in the future.
Oh, I'd be delighted.
Yeah, thank you. And thank you for watching the Serving Seniors podcast, where we highlight these awesome people like Raymond that help people thrive in retirement. Thanks again. Please subscribe and share. We'll see you on the next episode. Have a great day. Hey, this is Matt Helton with OneTrust Home Loans, home of Retirement Mortgage Solutions. And we really do appreciate you checking out the Serving Seniors podcast today. Now, please go to the description down in the body of the podcast, where you can subscribe to get future shows. Please click that notification button so you get notified when other shows drop. And also, if you can go to servingseniourspodcast.com, and we'd love to hear a comment about our show. We have a heart to serve seniors, and we have a heart to make sure seniors don't just survive retirement, don't just get by in retirement. We want to show seniors how to thrive in retirement. So if you know of anyone that's 55 and older that could use some extra cash flow, maybe the retirement's not going the way that they like, our retirement mortgage solutions are designed for folks, and depending on the state, they're either 55 or 62 and older, to make sure that they have that kind of retirement that they want. As long as they own a home and they're in a good equity position, there could be some solutions that they may not have thought about, or maybe they've thought of and they just didn't know how they work. That's what we do. So anyone in that age group that could use some mortgage advice, my team and I would love to be able to help them. Thanks again, and look forward to seeing you on the next show. Have a great day.